Welcome to the NEREJ NYREJ podcast. I'm your host, Rick Kaplan. Today's podcast is sponsored by Cassidy Paving. Contact Cassidy Paving at CassidyPaving.com for all your paving needs. To be a sponsor on our podcast, contact me at rkaplan at NEREJ.com. And I'd like to introduce our guest for today. His name is Jim Brady, and he's with the Fathom Companies. And Jim, you're the CEO, correct?
Yeah, I'm the president of Fathom Companies. Yes.
The president of the Fathom Companies.
Mm-hmm.
So I gave you a promotion. So
I appreciate that.
So Jim, tell us a little bit about your journey and how you got to where you are today.
Yeah, so interestingly, I didn't start out in the real estate world. I started out as a professional sailor. I grew up in Florida on the water and happened to find that I was somewhat competitive in sailboat racing. And that led me down a very unique path and journey where I was fortunate enough to win some major titles, both nationally and 5 world championships. I was fortunate enough to make the U.S. Olympic team in Barcelona and won a silver medal in the Olympics in Barcelona, and then went on to compete in several America's Cup campaigns as the navigator for Dennis Conner on Stars and Stripes, and as the tactician for the New York Yacht Club program called Young America. One of the things that you do in that world as a professional sailor is not only you being paid to come out and go race some sailboat, and oftentimes it's a large kind of Grand Prix program that's owned by a very high net worth individual. You end up doing a lot of project management for those owners. So CEO of United Technologies at the time, George David, for example, was one of my clients. And somebody like George would hire me not only to come and steer his boat, but to put the program together, put together the logistics, hire the team, get the best crew we could, help us determine if we're going to build a new boat, who should the naval architect be? Who should the builder be? What kind of events do we want to do? And what I think is kind of unique, and the reason I touched on that is that doing that aspect of professional sailing is very much like real estate development in project management. So I kind of learned through the School of Hard Knocks how to be a successful project manager, running kind of multi-million-dollar sailing campaigns for very ultra high net worth individuals. And in the late 90s, I decided it was time to try to transition out of that, and was looking for an opportunity to do something where, as Dennis Conner once told me, Jim, you need to learn to make money while you sleep. So that sounds pretty good. And the idea was, at the time, I was one of the top paid professional sailors in the world, but I was only as good as my last race, and I was only earning income the day that I was out there on the water mostly. So I saw the real estate world as something that I thought I could parlay my skills into, particularly the project management aspect of it. I've had to kind of learn some of the finance side of it because I didn't know much about numbers and finance. And so in the late 90s, my old sailing partner, Kevin Mahaney, said, hey, if you're ever looking to get out of the real estate, out of the sailing world, and you want to get in the real estate world, why don't you come to work for me? And I'll basically pay you nothing while you learn. And so
Good deal.
And that really is kind of the entryway into a new industry like that. Is you've got to be willing to roll up your sleeves, do a lot of hard work, and recognize that you're not going to get any big rewards for a while until you start to gain some experience and can add some value to the project. So that's really how I got in the late 90s. Founded the Olympia Companies, which was based here in Portland, Maine. We did a bunch of projects up and down the East Coast, a lot of hotel development. Mostly we were doing Hampton Inn, Hilton Garden Inn type stuff. And I left in 2008 to take a sabbatical right before the world fell apart, and decided to move with my family over to Italy for a year. Well, of course, I moved in the summer of 2008, and by the fall of 2008, we all know what happened then. And I said, geez, maybe I ought to get a job over here and stay, because there's nothing going on in the U.S. So I was fortunate enough to get a job as a project director on a Four Seasons hotel and branded residence conversion that was taking place in Venice. So I worked for 3 years on a project there. Really had a great time. Love Italy. Don't think I'd ever want to work there again, but it's a great place to vacation. And when I came back to Portland, Maine in 2011, 2012, I decided to go off and do it on my own. So I started looking for a project to do, and I found the old Portland Press Herald newspaper building, about an 86,000 square foot building sitting vacant in downtown Portland. I felt that there was a niche in a need in the market for an upscale hotel in the Portland marketplace. I had previously developed the Hilton Garden Inn here in the market and seen the performance of that hotel, and felt that this market really needed a product that was shooting above that limited service level. Most people, including all the bankers that I talked to at the time, told me I was absolutely crazy. There's no way that this market could support an upper upscale lifestyle hotel. But I managed to put together very complicated, complex project that included federal and state historic tax credits, state new market tax credits, a grant from the city of Portland, amongst other capital sources, to piece together a really complicated historic tax credit rehab in converting an office building into a Marriott autograph collection called the Press Hotel. So that was kind of my first project that I did on my own. Shortly after we opened that, which we won a number of awards from Marriott, as well as Maine Preservation, Greater Portland Landmarks, et cetera, by turning this building into something really special. I decided at that stage to start Fathom Companies, and that we would take on the hotel operations, the management side of the business, as well as that. So that was really kind of the first project that launched Fathom Companies. I own Fathom 50% together with a father and son, Dennis and Chris Ruppel. I knew them from growing up in Florida. They're both Florida based in the wintertime and Maine based in the summer. They have been fantastic partners. They both have other ones. The father's retired real estate attorney and banker. The son is still very active in the fintech business. He's actually the chief revenue officer of a large publicly traded company called Green Dot, which is based in California. But both of them have been real strong partners and mentors for me, and really helped us kind of grow Fathom into what Fathom is today. What Fathom is today is a kind of a three-legged stool company. We do real estate development, so both historic tax credit, rehab type stuff. We also do ground up construction or development. And then the second arm of the business, or leg of the stool, if you will, is the hospitality management side. So we operate currently 5 hotels. We've got 2 others that are opening in the next 8 months. And then we have an investment arm. So we invest in real estate projects, whether it's a development project or an acquisition. We have kind of a real estate investment arm as well. So that's the three-legged stool of Fathom Companies. We're about 12 people deep here at our corporate office. We're based in Portland, Maine, in a small 25,000 square foot, 4-story historic tax credit rehab, new market tax credit project that we redeveloped from a Class B, really B minus office space, and did a kind of a gut rehab of this building about 8 years ago, and converted it into, really, I'd call it, Class A historic style building here, office building. And is the nice thing from your audience, as you know, is we're 100% leased, and we love it that way. So we're the top floor of the office building, but we've got great tenants below us, and really happy about that.
Well, I don't know how we can top the rest of the conversation, Jim. Your background, I mean that's a very interesting background.
It is.
I really, I'm a big fan of the ocean, so I do appreciate what you have done throughout your life, and it's a great accomplishments. And I also have to say that whenever my son and my daughter-in-law go to Maine, they always stay at the Press Hotel.
Glad to hear that. Glad to hear that.
They
So
love it.
interesting that the press was a great project. After we owned it for about 8 years, we actually sold it to KHP, Private Equity Group, and kept the management contract until just literally 2 months ago. The hotel was sold from them to a group called EOS out of New York, who has their own hotel management company. So as of June of this summer, we're no longer involved in the Press Hotel, but we also developed the Canopy Hotel, which is a Hilton product here in Portland. And maybe you've been to the Luna Rooftop Bar. It's probably it's really the primary rooftop bar in the Portland marketplace. It does great. And so we have that along with a couple of other, which I want to talk a little bit later about, these kind of apart hotel, I'm going to call them, short-term rental type properties with, 15 keys that we operate as hotels as well in the market.
Well, I haven't been to that rooftop bar because I don't drink, but I am
Well,
going to
that's
check it out.
well, it is we do have mocktails. Um,
Okay.
we have some food as well, and one of the nice things about it is we have an indoor space and an outdoor space. And being up on the sixth floor, right on Commercial Street on the waterfront, people love to go there because it's really a nice view out over the Fore River and towards Portland Harbor. So
Oh,
next
I'm
time you're in
sure.
Portland, please come and visit us at Luna Rooftop Bar.
Well, I'll be there in 2 days, so I'll probably go up there. I might
Good,
take a look, see how it
great,
goes.
great.
But I'm sure it's a beautiful place.
It is. It's been a great project, and the project won the Connie Award, which is really the highest honor you can get from Hilton. Hilton comes up here and flies potential developers of lifestyle hotels to come see our canopy because they think we did such a great job developing it. Both the architecture, the interior design, and we've won a number of service awards on our management company operating the hotel as well. So it's a great spot here in Portland.
So a lot of times when you put together these hotel projects, and it's just hotels that you develop, or do you go into
We're
multifamily or any of that
We've
other?
done some multifamily. We've done well. We're doing an 85 unit condo building right now. Kaplan Thompson Architects, a local firm, is our architect of record on that project. Hebert Construction is our contractor. We broke ground about 2.5, 3 months ago in Biddeford. So we acquired some land from the city. Biddeford. We did a joint development agreement with them pre-COVID. Helped them do all the master planning for the site. The city went and built a public-private partnership 650 car parking garage, and we bought the development parcels on either side of the parking garage from the city of Biddeford. And we permitted one of them for mostly residential with some retail on the ground floor, and we broke ground on this 85 unit condo, as I said, just earlier this summer. So we do some of that type of work. As I mentioned, our office building that we developed is a historic tax credit, late 1800s, four-story office building, and right in downtown Portland. So we do a number of things like that. We haven't done large, rental multifamily housing at this stage. There are a couple developers here that really specialize in that and do very well. Redfern, um, Jonathan Cully is probably one of the larger developers in that front here in the Portland marketplace. And Developers Collaborative is another developer here who seems to do almost all the historic tax credit slash low income housing tax credit projects in this market. They're really kind of the dominant player in that. So we kind of stick to our lane in the hospitality world. And if we find we're an opportunistic real estate investor and developer, if we find the right thing, we're going to go do it, even if it's not right in the hospitality wheelhouse.
Well, it does sound like you take these projects on that are not the most black and white type projects. Is
No,
that
that's
something you just fall into, or is that something you look for?
Well, no, that's a really great point, and I think it's actually, Rick, one of the things that differentiates us at Fathom is I can't speak highly enough about our team, from our VP of Finance, who's phenomenal, has been in the industry for a long time, as well as Marika Thorman, who runs our development arm of the business. We tend to do more complicated and complex projects because that's where we think we can add more value. So we've got a really sharp, very competent and experienced team. And if somebody said, "I've got a deal to build a Hampton Inn at a court at a highway, location that's barely going to generate enough," it's probably not the right kind of project for us. We like projects that have a little hair on them, that have a complex finance structure. This is We've done, I guess, four historic tax credit projects. We've done opportunity zone projects. We've done two new market tax credit projects. So these kind of complicated financial structures where we're syndicating credits or using the credits ourselves, um, or projects where they're in harder to permit and get entitled, using through challenging historic districts or things like that some people shy away from. we tend to figure that we can evaluate that risk and work our way around that. And by doing that, we're finding and doing projects that we believe generate a higher yield, and can create more value by doing not just the plain, black and white type projects. Exactly right.
So is this what you would consider like a boutique hotel?
Yes, it is, and I think that while that's really been our forte, the Press Hotel is a lifestyle hotel under Autograph Collection franchise. The Canopy is kind of a lifestyle hotel under the Hilton franchise, and we've got a couple of these smaller apart hotels that we've been involved with. We helped develop them and manage them. One is called the Weldon Hotel here in Portland, and we just opened this past May the Evelina Hotel here in Portland. These are small historic tax credit projects and 25,000 square foot buildings with 15 keys. There's no front desk. It's really a short-term rental type of a play. And primarily the reason that those happened is that the city put in inclusionary zoning for residential, and they probably just would have been residential, but the fee for inclusionary zoning was so high compared to the hotel side, and the hotel market's been strong in Portland. The NOI was better to convert those into hospitality rather than multifamily rental. So yeah, so I would say we are definitely a more boutique or design forward firm, but we also recognize that that can be somewhat limiting. And so if the right opportunity comes along to manage a courtyard, we're not going to say no to that, but it's probably more of a courtyard that's in an urban environment that can capture a higher average daily rate within the marketplace than a highway type location where I don't think that we're more of a commodity at that stage, and it's hard to generate any rate premium or RevPAR premium.
So how many of these hotels do you have throughout? And how far do you go in the United States with these?
Yeah, so we are right now all Maine based. We did sign a management agreement with a Marriott Tribute Hotel that's under construction in Winooski, which is right next to Burlington, Vermont, right there on the Winooski River. It's going to be called the Sugar House Hotel. We're opening this fall. So we've been involved with pre-opening and technical services, and we'll be the hotel operator. So we're already ramping up, hiring staff, et cetera, for that property. It's a pretty amazing development. Actually, the local developer, Doug Nettie of Nettie Real Estate, is the developer of it, and it's going to be a LEED Platinum net zero energy hotel. So really very forward-thinking, sustainability focused hotel, franchised with Marriott, with Tribute, which is one of their lifestyle brands. It also has a rooftop bar and restaurant. And it's actually really going to be exciting. I think a lot of people are going to want to go see that. It's very nature focused. So that's something we're excited about expanding into Vermont, and we'll look for some other opportunities there. We find these short-term rental apart hotel things work really well in markets where we already have a footprint with a full service or hotel that we already operate. The apart hotels don't require a lot of labor. We don't have, as I said, a front desk, but managing a property from a long ways away, if you don't have a footprint in the market, can be a little more tricky. So if there's a challenge, there's always a property manager or somebody from the front desk can go deal with some kind of an emergency that's taking place. But otherwise, a lot of what happens at these apart hotels is happening on a chat that's being handled, half now by AI. Is being able to handle a lot of that. And then we have a number of housekeepers and a property manager. So it's a pretty thin staffing model compared to say the Press Hotel or the Canopy that are, roughly 100 employees at those type of facilities.
Is there a limit to how long someone can stay in a short-term rental?
No, there's not. We're typically very happy to have longer term customers. Obviously it gets harder to generate the same average daily rate through the longer term stays because there are other options out there. But the projects that we manage, the Evelina and the Weldon, were set up and basically designed as apartments. So they have most of them have washer and dryer in the unit. They have a kitchen, a small kitchen, but more than you might find in a Residence Inn, which and it's an extended stay hotel. You really can cook with pots and pans and a living room. Most of them are 1 or 2 bedroom suites, so they're much larger square footage than you'd find at a typical hotel room that might be 350 square feet. These are, literally double that size in most cases. So yeah, we're very open to having longer term stays, but we may not be the most cost effective if for a 30-day or 60, 90-day stay.
So short term, if I can say it, short term extended stay is different from a what you're doing.
Well, yes. I mean, we do one of the units at the Evelina was we had a celebrity come and we really right when we opened negotiated a deal to stay there for the entire summer. So I think they did a lease for I don't recall if it was 90 or 120 days in kind of the penthouse unit. So we have a long-term stay and a celebrity type person that said that's the best place in town. It's got a rooftop patio and views over the harbor, and it wasn't inexpensive, I can tell you that. But they didn't seem to have much of a budget in mind. So
So I'm trying to put all these things together. You have extended stay, you have short term stay, rentals, and then you have uh, a longer term, and then you have a thing called Airbnb.
yeah, yeah. So one
So,
of the yes, I mean, and we utilize Airbnb and other platforms like that for booking. But really, the fees charged by a lot of those platforms are pretty high, and if you can generate enough interest in your project through your own website and drive that traffic, those future customers to book directly with you, it's a much better situation. So these hotels, I call them hotels, but kind of apart hotels, can take multiple years to really ramp. And most hotels take 3 years to kind of ramp up and get to a stabilized cash flow. And these are going to certainly take that. So we'll start to shift away from a lot of these more expensive platforms as more and more returning customers come back and actually book through us directly in the future, which obviously generates a better NOI at the end of the day.
so you still have the same amenities that you would have in a regular hotel, like you have someone comes and cleans your room every day and all the other things that come with
Typically,
it.
typically it's not every day if you're having a longer term stay. So we can charge. We're willing. There's options. So you can choose to have housekeeping every day at a slightly higher fee, or you can just have your housekeeping I think it's every third day. Um, the Weldon has a wonderful fitness facility in it as well. There's a co-working space there that's a nice quiet place with, like I'm in a quiet pod right now, kind of a cabin to keep private. So we have a few amenities like that, but typically it's not and certainly not the same kind of amenities you would have at a full service hotel like the Canopy.
Now, I know a lot of hotel owners, a lot of developers, they bring investors in to support some of these projects. Is this something that you aggressively go after as well?
It is. It is. That's a great point. And if we tried to do every project, with our own checkbook, we would be quite limited as to what we can do. And so at the end of the day, we do go out and raise capital for our projects that we develop or acquire. And what we've done even from back in the days when we first started with the Press Hotel, we did a friends and family raise because that project was so laden with historic tax credits and new market tax credits. We didn't have a significant equity raise, which was nice. And the projects have gotten bigger and bigger as we've grown. The current project that we're doing, I haven't talked much about, is called the Monument Hotel in downtown Portland. We acquired about an 80,000 square foot, 10-story office building was originally built for Fidelity back in 1910. It's been everything from Maine Bank and Trust to People's United Bank to when we acquired it, had M&T Bank in it. So that building has been completely vacated. We're doing about a $70 million project to convert that into a luxury hotel in downtown Portland. It's going to be a member of leading hotels of the world, so it's going to be targeting the very top end of the market. And I'm going to come back to your question here, Rick, is on a project like that, we've kind of shifted from doing just friends and family into a family office. So we have two family offices involved in that project. One is part of our GP that went in and got the project, bought the building, did all the planning, the entitlement, et cetera, to get to where we knew we had a GMP, a guaranteed max price contract to develop it. And at that stage, we were going to go out and go raise capital. We have a great relationship with a family office out of Texas we're involved with on two other deals. And we went to them first and said, "Hey, look, before we go out to market, is this something you guys are interested in?" And we're going to raise 70% of the equity, and the GP is going to put in the other 30%. And they said, "Great, we really love the deal. We'll take the entire 70%."
They made
As
it easy.
They made it easy. They have been one of the greatest groups we've ever had to work with. They've been phenomenal. And again, I mentioned that that's a historic tax credit project. They also invested in the federal historic tax credit as well. So they're a significant player in that project, and they've been a great partner. So we started in the friends and family raise side, the 85 unit condo project I mentioned in Biddeford, Maine. That project had to raise equity as well. We put in the Fathom principals put in 1.5 million and went out and raised 7 million through friends and family. So we still do a little bit of friends and family raise and starting to get more of a connection with a couple of different family offices now to do some of these larger projects. And as we grow, we've looked at trying to partner together with a REIT to acquire a hotel portfolio if it's the right fit for them and the right fit for us so we can grow our management company as well. So we're looking at a lot of different ways to capitalize projects, but we do have the ability to co-invest with projects to get management contracts as well. So yeah, that's kind of the long-winded answer to your question. But yeah, we put some capital in, but we syndicate or raise the capital through friends and family offices at this stage.
Is it very common to get these kind of tax credits is it because of the type of property it is
Yeah,
that
so
you get?
specifically the historic tax credit is something that we know a lot about and have a lot of experience in. Um, you have to be in a building that's been recognized by the National Park Service as part of the Department of Interior down in Washington, that you're either a landmark building or you're a contributing building to a historic district that's been recognized by the National Park Service. So if you meet all of those qualifications, your building will have had to have been more than 50 years old. And the National Park Service has kind of determined that it's classified as a historic building. And if it does, and you acquire that building, and you're going to double the cost basis in the building through a major rehabilitation of that building, and you get your plans approved by the National Park Service. And in the state of Maine, we have a state group too called the SHPA, State Historic Preservation Office. If you get your plans approved on the exterior and the interior for what you're going to do on the rehabilitation, then you'll qualify for these federal historic tax credits, which are worth 20% of the qualified rehabilitative expenses. So that's basically all the hard construction cost and a good amount of the soft cost from architect and engineer fees, even some of the financing fees. So the rehabilitation cost within the building itself, so it doesn't include additions or rooftop things, anything like that, but within the actual structure, or no site work, but within the building itself, you'll get 20% of federal tax credits that are paid out over a 5-year period of time. Maine happens to be very good on the historic tax credit side too. We have a state of Maine program that gives you 25 cents on the qualified rehabilitative expense. So combined, we're getting 45 cents on the dollar of qualified rehabilitative expenses per project. And with construction cost being as high as it is today, some of the best projects to do with these days are historic tax credit projects. It's giving you that extra boost to help reduce your redevelopment cost. And there's arguments that historic buildings are more expensive to rehabilitate than ground up construction, which is often the case. So you have to find the right kind of building that's not in bad structural condition, it needs a rehabilitation, but it lays out efficiently too. That's one of the other challenges. An example in this building, has one major means of egress, but we all know in a 10-story building we need two means of egress. So, we're cutting a new stair core through the building to get that second means of egress. We've got to bring elevators all up to code. So it's a major gut renovation. Replaced all the windows, the roofing, HVAC systems. We literally took the building back to the exterior wall, the steel structure, and the floor system, and that's about it.
Now, do you also have to change some of the structure as far as like supporting structures?
We were fortunate in this case that we have had to do mostly the structural work that we've had to do here is really just around cutting this core new shaft through the building for both mechanical as well as this new stair to get shafts to run vertically through the building. So we've been very fortunate that very minor structural work has had to occur in that building, and that's one of the benefits of that kind of a project. So not every historic tax credit project is a no-brainer. You need to go in and really do your due diligence and understand the condition of the building and what you're getting into. The rehabilitation cost this project, which is being done by Zachow Construction, I would tell you that our hard construction costs, we could have built a ground up building for less money than what it's costing us to rehab it, but we've got 45 cents on the dollar credits as well to help offset some of that.
Well, it sounds like you got this whole niche thing on these boutique hotels. It sounds like you got it down pat.
But we recognize that for us to continue to grow, we need to go outside Maine. So we've been looking at projects all the way down into the Carolinas. We've had two different projects that we couldn't make pencil, but we had them under contract in Wilmington, North Carolina. We've looked at Asheville. We've looked at a number of places in Greenville, Spartanburg area as well. So we've kind of been looking in the Southeast. As I mentioned, we're expanding into Vermont with this project in Winooski with NEREJ Real Estate. So we're actively looking at stuff outside of here as well.
Anything in Massachusetts?
Nothing yet. It's a great market. We did spend some time looking at a historic tax credit rehab project there in the Boston area, which didn't pan out. I don't know if they've done their deal with somebody else, with the Boston developer or hotelier. I talked to them recently, and it sounds like they're going to select them. But we're certainly looking. We spent some time on that because it's a historic tax credit project. I gave them a lot of free advice, and hopefully they help them get the project. I mean, my theory is if you can help somebody else out and it helps them get across the finish line, you've done a good deed. So, I would have loved to have had an opportunity to do more, but if nothing else, I think we gave them a lot of good advice and got them on a path where they're now look like they're going to get their project financed and moving forward. So it makes me feel good, anyways.
Well, it's funny. I do a lot of I do an event every year with hotel hospitality, and I find that the people that are in the industry, everyone knows each other.
Yeah, it's
It's
a
a very
very yeah,
close industry.
it's not 6 degrees of separation. It's like 1 degree of separation. Yes,
Exactly,
yeah,
which I find unique.
yes, very much so. I mean, we talked before the show began here about a number of different folks from Jim O'Connell, et cetera. That yeah, we all know the same people. If we've been in this business, I've been in the real estate world now for over a quarter of a century. Yeah, you get to know a lot of people doing that.
Well, we're getting close to the end. Jim, if someone want to get a hold of you, do you have a website?
We do. It's fathomcompanies.com. So FATHOM companies.com. Fathom is a depth of measurement. The Dennis and Chris Ruppel, my partners that I own Fathom with, are also big boaters and sailors. We're all New York Yacht Club members, and when we were thinking about a name, we thought about the nautical aspect and kind of led us to, Fathom is a depth of measurement. And so I like to think of ourselves as we have a depth, a lot of depth in our experience and knowledge. So
Very
yeah,
good.
that's what Fathom Companies is all about.
Very good. Now, the next question I have to ask is, how big is your sailboat?
It's funny. Right at the moment, I don't own a sailboat. I made the crazy mistake of buying one. You know what they say about owning a boat. The best day of owning the boat is the day you buy it and the day you sell it.
Yeah,
I had
or break out another thousand.
Yes, the hole in the water in which you pour money is deep and wide.
Yeah.
But I had a really nice performance cruising boat, a 56-footer that I kept over in Palma, Mallorca, Spain for the last 4 years and just sold it. I have a local, like a picnic boat style, wooden boat that I use here in Maine, a 34-foot picnic boat that I cruise around Casco Bay and around the Gulf of Maine, which is fantastic for taking people out for harbor cruises and stuff around the Portland area.
Yeah, it's a nice relaxing way of spending your weekends.
It really is. Absolutely. And this with, you're catching me here in the heat of summer. Here we are in the mid of August. So, yeah, it's been nice boating weather. This has been a great run we've had so far this summer.
It sure has. I had sold my boat about 10 years ago. And there's times that I miss it, then there's other times that I don't miss it.
Yeah. Yeah.
You
The, be-
understand that.
the best thing to have is friends with boats.
Exactly. That's the key. That's the key. That works
Yeah.
with pools also.
Yes, exactly.
Well, Jim, I want to thank you for coming on the show today. And we were talking with Jim Brady with Fathom Companies, and they do sounds like you do a fantastic job with your hotels, the boutique-ish type of hotels. And if anyone's been to Maine, they must know the Press Hotel.
Yeah, I'm sure
I
they
mean,
do.
it's a go-to spot when you go to
Yeah.
Maine.
Yeah. Well, the Monument Hotel we're going to open next year will become the new go-to spot. So,
All right, I'm looking forward to seeing it.
yeah, that would be great. Well, I really appreciate you having me on, Rick. Thank you so much.
Again, thank you, Jim. Jim Brady from Fathom Companies. And I want to thank everyone for listening. And you're listening to the NEREJ NYREJ podcast. I'm your host, Rick Kaplan. Today's podcast is sponsored by Cassidy Paving. Contact Cassidy Paving at CassidyPaving.com for all your paving needs. To be a sponsor on our podcast, contact me at rkaplan at nerej.com. Until next time.